Okay, Testa says good afternoon, everybody. Good afternoon. My name is Raul Rivera, and this is your market profile analysis, your afternoon market profile analysis. Today is Monday, July 31st, 2017. Let's get started with today's analysis here. So we've been looking to be buyers of the market in the S&P for the longest time. The market to be buying is the S&P. When we take a look at the volatility index, I mean, there's no volatility, there's no fear in the market. Everybody wants to buy the market, and all you have to do is just open up a brokerage, click the buy button, and you'll probably be making money because the market just continues to appreciate in value. Today we had only one true economic report, and it was the pending home sales. We were looking for a read of 0.7%. We actually did better than that. We did 1.5%. So home sales just continue to rise. Real estate continues to be a hot sector in the stock market and in the market of buyers and sellers of real estate. And that gave a little bit of life to the S&P 500, but we did find some selling early in the session, and we tried taking advantage of it. So we were trying to buy, hang on right here, hold up, right there, okay. We were trying to buy 64 to 65. Early this morning I had orders in the morning video, 64 to 65, and then we tried buying 60 to 62. If this level should happen to fail, okay, if it happens to fail, if it happens to move lower, then we're going to add to our positions 60 to 62. And we were looking to sell 77 to 80, so we came very close to the sell. Pending home sales. The expectation of a good number was what was lifting us higher here, and then came B period, which is 9:30 to 10 a.m. Okay, we can see B period, traded all the way up to the highs. That's as soon as B period closed, we just continued to move lower on some selling. So the reaction going into the news was to buy, and then just before the news we started selling it, which is good. In order to buy low, we have to have the market sell, but we also need a little bit of volatility to help with that, because we can sell 2 to 3 points, but without volatility it's tough to sell 6, 7, 10 points. We saw a little bit of volatility increase on this sell-off from Thursday, right? And it was able to do that because there was an increase in volatility. I'm telling you, once the volatility index increases and remains at a constant 14 to 17, we're gonna get some of the best trading that the market's ever seen in the S&P 500. Number one, look at the value, 2470. I mean, we used to have fantastic days trading the S&P at 1400 and 1500, and we had a lot of volatility then. Just imagine now, the price swings have to be 40 to 60 points on any given day. So I can't wait for volatility to get there, because it's going to create some just insane amount of trading and just more than one opportunity per session. Which is kind of what we're used to now. So the opportunity was to buy 64 to 65. Unfortunately for me, the low of the day was 65 and a quarter. 65 and a quarter. I had orders at 65, 64.50, 64, and then I had another 3 contracts between 62 and 60, and I couldn't even get filled on one. Could not even get filled on one. So the S&P was once again the most boring market to trade. We were looking to buy, we missed out on the buying because the market just doesn't have enough volatility to sell. So we just got to get lucky with this one. We know where we want to buy it. We know where we want to sell it. We just need to get lucky enough to have enough volatility to get the price moving, right? Because I mean, on a day like today, low volatility, what's volatility? What's the VIX at, like 10 or something? 24.75 and a quarter, and we made a low at 65 and a quarter. Literally a 10-point market today. That's all we had, a 10-point market. We should be having swings from high to low, like I said, 40 to 60 points. Why don't we have that? It's just a lack of volatility. Everybody knows what the market is going to do, and the market is going to go higher. So with everybody's mindset, right, because volatility is just a measure of the implied volatility in the SPX options. The SPX options imply what, who's hedging against the market and who's betting on either side, so that there's no increase in implied volatility on the put side. There's no increased volatility on the call side. So everything's just balanced, and it just creates a buying type of, environment, right? It just creates a buying environment. So we want to be looking to buy the lows, sell the highs. But of course, we want to do it at the right price. We don't want to chase. Chasing, there's something in NinjaTrader that they call the MAE. And if you ever do statistics on your trading, this is a really, really good statistic to look at, and it's called the max adverse, or something like that. Max adverse, something like that. What is it? MAE, max adverse excursion, I think is what they call it. You could do statistics on your own trading to see how you do and how you can improve your own trading. And that'll actually show you, how much a position will go against you before you're either stopped out or it reverses back to hit a target. So I don't like to chase because it increases my MAE, right? I know I have good return on my investment when I trade at the exact levels I pick. And these exact levels are picked using singular distributions and the value area of those singular distributions. So again, the areas I want to buy, unfortunately, they're too good for the market, right? They're too good for the market, and I just did not get a fill, right? If I had gotten a fill, 60, even at 65, the market traded back up to 70. Okay, that's 10 points. Excuse me, that's 5 points. Okay, that's 5 points. That's 50% of the range of the market in the S&P, which is unfortunate. The other one that just drove me nuts, crude oil. So let's take a look at crude oil. We want it to be long only crude oil early this morning, and we want it to be long 49.10 to 48.90. Okay, 49.10 to 48.90. Now this market has the volatility, it has the range, it has the volume, it has everything you need to ask of it. Today, unfortunately, we couldn't get a fill. We were, again, just a little bit too good for the market. And about eight ticks too good. When I say too good for the market, it just means that the market didn't get to that level that I was looking for. We were about 8 ticks too good. First order, we had one contract at 49.10. The low of the day, I believe, was 49.18. So we had an 8 tick difference between my entry location and where prices bottomed. As you can see, okay, all this trading up here, there was no trading up here, okay? There was no trading up here. The only reason we see letters up here is because we just made them, okay? Let me show that to you in a more conventional way. We're just gonna go ahead and go to our hybrid mode. And in hybrid mode, we can see that prices, okay, we're trading lower, bottomed out where, very close proximity to where we knew we could find a good buying opportunity. And then within an hour, just rallied everything back and consolidated up here. Okay, so just look at this black line. Now I'm going to switch over to profile mode. And as you can see, all this trading that occurred right in here, this is brand new trading. This just happened. Okay, remember, prices were moving lower before they ripped higher and then consolidated. Okay, so this was what we saw today, and here's what it looks like on the profile. So just imagine, I kick myself sometimes because this happens every now and again, and it'll happen to every trader. Okay, I'm not the only one, or if I am the only one, that's how I make myself feel better. Even just one contract at 49.10 would have produced over 100 ticks. Okay, 100 ticks is $1,000, right? Because this is a 10-point tick market. A 10-point tick market. So one contract from the lows to the highs could have been over $1,000. Unfortunately, I was just too good for the market. But it just goes to show, our levels are really, really accurate. They can get you into the right spots. And it's not me telling you, hey, this is where you need to buy, here's where you need to sell, because I'm not just drawing these levels out, I'm using the market profile, right? And when we draw market profiles, we're able to see where value truly lies. So if I wanted to split this profile, because it's a multi-distribution profile, and there it is, I just split it, simple click of the mouse. Now I can see that we have a D followed by a P. This is consolidation followed by a trending up pattern. Okay. Today what we wanted to do, we wanted to be buyers. There's a value area high here. There's a value area in this distribution. Okay. That's the idea behind wanting to buy it here. And we weren't wrong. We were wrong by 8 ticks, but we weren't wrong. We were just way too accurate. And that's what we do with the market profile. We find these levels, we place our orders, and we make money. Okay, there's been very few days where I actually lose money trading the market profile, and on days that I actually lose money are days that I venture off and try and trade a different strategy or something like that. Okay, the market profile is just accurate to the T. Okay, it's a beautiful thing. All right, taking a look at gold. Gold. So we had a B-shaped distribution early this morning. Let me just make this a little more legible. There we go. So we had a D-shaped distribution early this morning. We opened here and we were trading around here. And we saw the profile turn into a B. Of course, as it continued to kind of grind to the upside, it did fill in some of the void. Now it's definitely a D-shaped distribution. Okay, but if I were to split this, let's see if I can split this the way I want to. So I'm just gonna go ahead, click the profile, and there it is. See how easy that was? Just click anywhere on the profile and it'll automatically split for you. So here we have where we open, bulk of the trading is under the open. We had a B followed by a D, but a lot of this trading up here filled in this void. See how that works? So this is how profiles build on top of each other, right? This is how we get these kind of pile ups of letters. This section filling in this section, okay? And when I merge it together, we can see that it's, full-blown D-shaped distribution. We can see that area get completely filled, that void. It's amazing. So D-shaped distribution, well, at first it was a B. We were trying to be sellers, but the market is continuing to move higher. I don't want to be a seller. I want to be a buyer. So We tried buying 68.5 to 70. Again, just too good for the market, but the market didn't do anything today at all. 77 to 72. That's a 5-point range in gold, which is, I mean, think about it. 5-point range in gold, okay? And we had a 10-point range in the S&P. And this is just me continuing my rant, okay? Because of the lack of volatility. 5-point range in gold, 10-point range in the S&P. What is gold valued at? Okay, it's in the 1270s. Okay, 1270s. Where is the S&P valued at? 2469 at the current moment. How is it possible that a market that is worth more moves less than a market that's worth less? Volatility is the answer. Volatility. All right, enough with ranting about volatility. We missed the trade here. We didn't take anything. The market didn't give it to us in gold today. Looking at the 30-year, we finally got a trade here. Got a fill on one contract. This was early this morning. I was able to take 5 ticks out of it. I figured we could probably move higher, especially since the 50 lots and greater trades were just exploding to the upside. I mean, they were just buying the living crap out of this from the low. Okay, from the low. I'm not the only one who uses the market profile, guys. It's the institutions. It's the proprietary traders. It's the hedge funds. Okay, they don't go out bragging about their trading styles, but rest assured that the market profile is definitely one of them, especially when it comes to trading the futures. And just because a hedge fund doesn't talk or institutions don't talk about trading the futures doesn't mean that they don't trade them. In fact, they need to trade them. Okay, they hedge positions or speculate in directions of markets using the futures. They don't go out and buy the stock market. Okay, they go ahead and go and they buy futures to hedge and to speculate in directions. They buy stocks, okay, because obviously they have research. They know they can make money buying stocks, but to hedge against their big portfolios, they use the futures, right? Because the futures are at not 24/7, not even 24/5. They're 23/5, right? 23 hours a day. There's about just 1 hour, 5 to 6 p.m. that the futures are halted, but that's about it. I mean, you can trade them overnight, and there's plenty of liquidity, especially in names like the S&P 500. So here we wanted to be long 20 to 26. I got long at 24. I have my, I don't like to clutter my workspace. So I opt to not show my fills here. Hang on. But I'll bring them up right now. So let me go data series, scroll all the way down. Text and markers. I'm going to go ahead and click OK. So here's where I got long. Okay. 52.24. You can see the fill there. Just one contract. I was looking to add a second contract at around 12, 52.12. But of course, the market didn't trade low enough. The market did trade higher from here. So I went at 24, got out at 29. So about 5 ticks profit here. Not a bad trade, of course. You know, if you trade more than one contract, you made a killing on this one. But, you know, I decided one contract because there's a lot of leverage in this contract. I mean, $31.25 a tick. That's huge. Okay. So what I made on this trade was 31.25 times 5. That was my profit for the day here in the 30-year. But again, using the market profile, I was able to derive these levels here and here. So we wanted to be buyers between 20 and 26, 11 to 13, and we wanted to be sellers 28 to 31. Okay, 28 to 31. I tried to sell at the highs, but you know the market just sort of stalled around here, which also happened to be the VWAP. So I'm just gonna go ahead, shift over to hybrid view. Here we can see the market dropping, entering my position, and going away into profit. So we went as high as time, and time or TWAP was at 53.04. So what's interesting about our software is that not only do we have volume weighted average price or VWAP, I'm sure there's a lot of people out there who know VWAP, but there's a lot of people out there who sort of ignore, you know, the evil twin brother, which is TWAP. Okay, so there's volume profile, okay, and the mean. You know, if you've ever taken algebra in high school or middle school, we all know about mean, median, mode, right? So the mean of the volume profile is VWAP, okay? The mean of a market profile or a TPO profile is the TWAP, okay? Now, time, you can't speed it up. You can't fast forward time. You can't, you can't slow down time either. So it's less reactive to price movements, whereas volume can increase and slow down as market events occur. So just to show an example of that, let me just zoom in here some more. And VWAP we have here in this color blue. Right here in this color blue. Okay, and then we have TWAP in this kind of beigeish, khaki type of color. Okay, look at how VWAP reacted. Right, it had this big down, this little downdraft here as prices moved lower, and that's because volume began increasing around these prices. So because of volume increasing, the VWAP, took a dip there. But time doesn't increase, it doesn't decrease, right? Time remains still. And looking at TWAP, it just kind of, was just cruising through the day. And that's actually where we found resistance, right at the TWAP before moving lower. But, I mean, the market profile, I sound like a broken record, but it's just the best tool to trade the futures with. If you're a discretionary trader, this is the way to trade the futures. I mean, can't get any better than this. Catching the low of the day and, selling for a profit. Even, it might not be selling at the high of the day, which is the goal, but, it still puts you in profitable positions, okay? More than half the time, okay? I would say 80% of the time, you're golden trading the market profile. A lot of volume today too. So I mean, it puts you in the positions where the big players were playing as well. I mean, right where I got in, no coincidence. Okay, the large players, the 50 to 2,000 lot traders, were buying in, and they were just buying the rest of the time. Now, the asset prices didn't move, but I'm sure tomorrow we're gonna get some movement to the upside. So I do expect the S&P to continue to sell off, probably retest some support areas, but the 30-year produced a winner here. And lastly, I want to just show one more trade here. This is on a market that I barely trade the Nasdaq, but one of you guys was like, "Hey Raul, can you check out the levels on the Nasdaq for me?" And I was like, "Sure." So let me just show you guys the Nasdaq here, because the market profile works on all markets. Okay, there's a couple of things I like to say. When trading the market profile, it's number one, it's hard to unintentionally be on the wrong side of the market. Okay, it is hard to unintentionally be on the wrong side of the market. And number two, all markets look the same through the profile. All markets look the same through the profile. So for example, just look at the candlesticks, right? The candlesticks are everywhere. A lot of chop, a lot of craziness. Oh, there's got to be support here. Look at all the trading that happened here. Well, got completely destroyed. Oh, look at up here. We made a top. Over here, we got a V-shaped bottom. If it takes out that high, this high here, we're gonna trade higher. Well, we traded higher and then we traded lower. So there's a lot of misleading. If you do the statistics on a lot of the trading patterns that everybody loves to point out, like a bearish engulfing or a head and shoulders pattern, you'll notice that those patterns do not occur often. Okay, and the ones that work don't occur often. Okay, there's a small percentage chance that a lot of these patterns just don't work. Okay, now when I look at the Nasdaq or any market at all, okay, if I'm looking at it through the market profile, they all look the same. Why? Because I'm looking for three distinct shapes. I'm looking for P's, B's, and D's. Okay, that's it. That's it. I'm not looking for head and shoulders. I'm looking for statistically proven distributions. P, B, and D, those are the ones. Okay, so looking at the Nasdaq, we figured we had a couple of value areas at the lows that we thought were pretty good. So if I split this profile right there, we create a B-shaped distribution with a value area down here between 64, 65-ish. And here on this profile, let me just split it. What the heck, NinjaTrader's acting a little slow here. There we go. So here's what we have. I just split distributions apart. Okay. Here we have a D followed by a B on a range extension. Right, look at all the single prints. And here we have a B followed by a P. And that doesn't matter today, right? What matters is that we want it to be buying value. And true value, like I said earlier, true value lies in singular distribution profiles. Right here is where we wanted to buy it. So I decided, you know what, let me put a one contract trade. It's a market I don't necessarily trade all the time, but you could have made anywhere from 15 to 20 points on this trade. I mean, it just worked out that amazingly. So let me just show you guys my fill. I try to be as transparent as possible. I'm not out here talking BS. I'm out here, trading for real. So we got long here. This is where we wanted it. Okay. Got long 71.75. And I got out at 89.50. So let's do the math because I forget how many points this is and I can't do the math. You see, I'm a millennial. And when I was going to school, calculators were a thing. So they conditioned me to use calculators. I can't do math in my head for anything. So 89.50 minus 71.75. Oh, really? So apparently I can't use a calculator either. So 58.89. 50 minus 58, 71.75. That's how I should have done it. 17, pretty much 18 points on this trade. 18 points on this trade, and it had the potential to make over 30 points. I think about 30 points was the high. So we made 17 points on this trade. I'll be looking to do a little more Nasdaq analysis since the Nasdaq seems to be having a little bit more volatility than any other market. Or it could have just been an event for today, right? I mean, from what I'm seeing here, the Nasdaq looks just as boring, right, as the S&P 500. I mean, these are some tight ranges until we had this drop, and then we suddenly have an increase in range because we have an increase in volatility. I mean, it's just what it is. All right, guys, so that's all the time I have for today. I hope you guys enjoyed today's video. We'll be doing another one on tomorrow, bright and early, around 8:30 in the morning is when we start checking out some some profile levels and do a little bit of Facebook Live. So I want to encourage you guys to click the link I believe I posted with the video, www.themarketprofile.com, and sign up for a 2-week free trial of my trading room, where I go over all the markets. We go over gold, 30-year, S&P, Nasdaq, crude oil. We go over the Dow, the soybean market, euro, yen. If you want me to take a look at any market that I haven't seen, that I haven't talked about, you could always feel free to ask, and I don't mind, putting out some market levels on that one, market profile levels, because like I said, the market profile can be applied to every single market, and the market profile looks the same through every market looks the same through the market profile. It's just a wonderful tool that I think more traders like you can definitely use. You know, it's just makes discretionary trading much better. It makes your trading plan better, and you don't have to rush. A lot of indicators out there, they paint buy signals and sell signals as soon as the market occurs. As soon as the market runs on you, it triggers signals and things like that. And sometimes we have to end up chasing because we were too slow to enter the market, or something like that. With the market profile, we don't have to do that. With the market profile, we know the levels that we want to buy, we want to sell, and what's the beauty of it is we know that ahead of time. It's almost like looking into the future. We know where we want to buy if it moves lower, where we want to sell if it moves higher, and we're prepared to take the trade on any side of the market, whichever one gets hit first. Um, so, like I said, don't be shy. Sign up for the service. It's 2 weeks for free, and think about making the market profile into a tool. And to me, it's much more than just an indicator. It's a charting technique, and I hope you guys can take something out of this, and make hopefully make the market profile into a charting technique that you guys love and will use for your trading. So with that being said, I hope everybody has a great evening. Good luck with your trading if you trade overnight, those Forex guys. And I'll be back tomorrow morning. Thank you, guys.